So if you haven't already seen it, gold absolutely tanked on Friday, and in this video I'm going to tell you exactly why it happened. Welcome back to another video, guys. Today I'm going to tell you why on Friday the 7th of June, gold almost dropped 1,000 pips. That is absolutely crazy. It's not many days like that where gold does a move in such huge quantities, but Friday was one of those days. Now, one of the biggest reasons why that happened is because China has paused its gold buying activities, right? So they're not actually currently buying any more gold. And why is that a major thing? Well, because they've been building up their gold stockpile for many years. And if you've been following the markets, you'll know that on the 20th of May, gold hit its new all-time high, where it reached $2,450 per troy ounce. Insane. We are living through a moment of history with the values of gold being so ridiculously high. However, since it hit its all-time high, gold has actually dropped more than 5%, and that's kind of like the region where it's been consolidating over the past few weeks. So in this video I'm going to go through the charts with you, go into a bit more detail as to why this move was so significant, what's the potential outlook of gold for the remainder of this year and going into 2025. So let's break that down. Okay, so one of the main things that you need to look at the moment when you're looking at this chart, obviously this is Friday, so it's an absolutely huge bearish candle. Okay, and if I measure that from the top all the way down to the bottom, it's 980 pips, basically almost 1,000 pips. Now, as I said earlier, gold doesn't usually do that, but the days that it does do that, obviously there's a significant piece of news that's happened. And this, particularly on Friday, was also added because it was NFP, right? Non-Farm Payroll. Now, for those of you that may not know what NFP is, or Non-Farm Payroll is, it's one of probably two main, really important pieces of news that come out every single month. The other one being Consumer Price Index, CPI, where it will significantly affect the price of the US dollar and anything tied to it. So obviously with gold, it will have the opposite effect of what the dollar is going to do based on the news that comes out. So NFP gives you the economic status of all the jobs of the labor market in the US, excluding agriculture and government related jobs. Now, this data measures the net change in the employment from the previous month. Remember, all this data is lagged by 1 month. So this month's data, this month's figures that came out on Friday, are actually last month's figures. And this data essentially measures the overall health and the trends of the labor market in the US. So what does that essentially mean? Well, it means if the figures come out higher than the forecasted figures, that's going to be great for the US dollar, which means the economy is actually doing well, better than expected, which was actually the case on Friday. The figures came out higher than expected, and that ultimately means the value of the US dollar is going to rise because it gives the economy the indication of, okay, more people are actually employed, so the value of the dollar is going to increase based on that statistic. If it's the opposite way around, where the numbers come out lower, that's a good thing for gold because the dollar is going to decline. So the value of gold is then going to climb. So on Friday, you can see here that the numbers were 182,000 were the forecasted figures, but the actual figures came out 272, which is a significantly higher number than expected. And as a result of that, I mean, if you have a look at the dollar here, you can see the dollar index absolutely skyrocketed by 0.85%. Now, that might not seem like a huge number, but then again, when you look at what it did to gold, it's absolutely crazy. Now, that was added again to the fact that China has stopped buying gold, or paused its activities, at least for the time being, of adding more gold to its current stockpile. Now, if you have a look at the dollar index right here, you will see that over the last few days, this is the daily chart, so over the last few days, we've rejected off the key level of 105. Now, this is a very significant level, and it goes way back here, okay, all the way back to the 70s even. So this is a very significant level, and you can see multiple rejections, multiple retests, etc. So this is a super key level, and that's why we've had multiple rejections through here. Now, going back to the daily time frame, you can see that this area was tapped into between 1038 to about 104, and that's formed obviously the resistance zone from which this candle on Friday rejected, and it headed back towards 105. Now this is quite a big zone here for you to consider when you're placing your trades in terms of using the dollar index as your reference point, because anything around this region would correlate directly with whatever pair you're trading that's pegged to the US dollar. So in this case, gold, you can see that it did the exact opposite of what the dollar index was doing. However, I also want to draw your attention to the yields, right? So the 10-year yields have also had a significant impact because of what happened on Friday, and they have now increased by almost, well actually it has been 3%. That's quite a significant gain in one day. I mean, you can look at how big this candle is, right? That's the daily candle here, so you can see how big that candle is. And I mean, yes, we have had declines in that volume before as well. Like here's another one over here from the April the 10th. That was almost 5%. So massive moves, and they usually tend to happen when things like NFP and CPI news are released. But this is another reference point that you should look at when getting confirmation for the trades that you are about to place. So the dollar index and the 10-year bonds yields are the two main references that I look at just as correlation, just as confirmation for the trades that I'm going to take. So if you go back to gold now you can see that this is an absolutely massive candle. But there's multiple correlations here, multiple things that could have indicated to you to give confirmation to where the price was potentially going to go next. Remember, news is the excuse. That's a term used in the industry, and it usually means that whatever news comes out, it's going to be an excuse to manipulate or move price in the opposite direction or the direction that it was already traveling, but push it a hell of a lot further than just standard price action. Now, something else that's very important is looking at the overall picture of where the highs, the lows of the dailies and the weeklies are sitting, and the session highs and the session lows of each day, because those things are all going to be important, and they're all going to correlate to key points to which the market is going to either hit and continue breaking above or below, or it's going to reverse from there and then impact that move quite significantly. I hope that makes sense. So as you look here on the Friday, you will see that, I'm just going to hide things for now so you can see here. So you had this move here, which was the all-time high from the 20th of May, and then we came all the way back down, consolidated for a few days around this area, slightly broke above this area to make it look like liquidity is being taken, created a new high, and then we obviously absolutely tanked, breaking below all of these liquidity zones, and now we're tapping back into this massive area of volume / liquidity. And you'll see here on the chart that I've drawn all the weak highs and lows, right? These are very important. Obviously there are lower weak highs and lows down here, but I've just hidden them just to make the chart less cluttered. Two major levels that you need to consider here. One is obviously the all-time high. The second one, for me, what I look for is 2300, psychological level, where you can see that we've had multiple rejections over and over again, and then we've broken above and retested off. Now I want to show you the weekly candle here for a second. Now there's two very important things that you need to see on the weekly stage, and this should kind of give you a picture of where the market is going to go next. And this is what I was saying earlier, what's the potential forecast of what we're looking at next. Looking at the weeklies, we have been pretty much bullish for a very long time, right? Since October 2022, technically we have been very bullish. In fact, if you can go way further back, but we had a bit of a decline before we had the all-time highs hit in 2020, and then again in 2022 at the beginning. Then we broke some liquidity zones below here, and then we obviously continued pushing up. Now we are here at our current all-time high, from where we are retracing and breaking below. This is super important to understand, okay? Because there is a huge potential, number one, that we are going to be heading much further down, maybe even to 2200, or maybe even much lower than that. Maybe I'm thinking around this sort of zone, which is 2140, 2150-ish range. And that's a significant amount of downwards movement for gold to now tread along over the next few weeks, over the next few months. Let's see how things play out. But this is the market structure that has now been put into place. all from this current week that's just happened, or last week rather, and the majority of that was triggered by Friday's move. So you can see a huge wick to the upside, filling in any sort of, let's go back to the daily time frame, liquidity that was taken. And of course you have an area right here of supply as well, which is where we've tapped back into. Oh, I don't know why that was, there we go. So that was tapped back into as well. Multiple confirmations here to tell me why this is going to be going in the opposite direction. That's on the daily time frame. If I now go into the 4-hour time frame, it should start to give you a bit more of a clearer picture. I'm going to remove this blue box because it's too much information going on. There's two main things I want you to look at here. Number one is this line here that I have marked, which is AH. AH stands for Asia High. This was the Asia High from May the 22nd. That is where Thursday's and Friday's session pushed into before we had a rejection. Now the rejection came in just into the London session. So we had Asia push all the way up, retest off that Asia high from the 22nd, and then as London session has kicked in, that's when the news came out to say China has stopped buying gold, and then obviously from there we have absolutely tanked. Now there's another thing that I want you guys to see here. I've also marked 50% fib. That's a important area of confirmation for me as well. How have I worked out where the 50% level is? Well, obviously it's from the all-time high to the lowest point, which is right here before we had a change of direction of price, which was, again, that was the lowest point before the market then went all the way back up. And you'll see 50% where I've drawn this line. And now if I go back to the 1 hour, you can see that the Asia high and the 50% level both are pretty much next to each other, which is where the rejection has happened from. And obviously now that's where I've marked the highest point of week 23, which is what you can see here. And I've just labeled here Asia high broken, just so that I don't have to go all the way back to check where that was, so I can just see it here. So that's an important thing to understand. Now we're following structure. Now this massive move that's happened will maybe make things look like, okay, there's a huge amount of volume that's been pushing the market down. So as NFP has now kicked in, you would expect some form of retracement because we've left a massive imbalance gap here. That would indicate, hey, we may be pushing downwards now to capture some liquidity. Let's go to the 30-minute, for example. So as this move has started to happen just here, you can see that, okay, buyers may have been started to get excited to say, look, all these liquidity levels have now been swept, and we are now in this range over here where we may see a bit of a retracement, and then we could have pushed up all the way, maybe even to this 6-month high. That's what this line here is, by the way, in case you're wondering. You'll see on this 6-month chart, the green line here is a 6-month line, and that's the line that I marked a few weeks ago, and I publicly tweeted that to show you guys where I feel the rejection is going to happen from. It's kind of been following that plan so far. So that's now where the rejection is confirmed from over a 6-month period, and you're going to see potentially a decline over the next 6 months, because if I now do this and I hide it, you can see we are in a zone of rejection. And on a monthly candle you can see 1, 2, 3 massive wicks beginning to form. So as June now continues, we could be breaking below the low of May, and that could now trigger the next move all the way down going into July, as I was speaking about earlier. So going back to the 1 hour time frame, and as the liquidity, actually let's go back to the 30-minute. Now there's so much volume that would have actually been pushing this market down because of the pause on gold by China. If I'm showing you the weekly candle, and I'm showing you that we have now broken past the previous weekly high over here, sorry, the weekly low, then what's it going to take for the market to continue flipping over, right? In other words, reversing in this case. Volume is, right? You're going to need a massive amount of volume to make that market continue to push in the direction that it was going. And because of the 30-minute time frame, looking at it and you're thinking, hey, there may be a liquidity sweep before the market now reverses and captures liquidity above these levels and clears the imbalance, but it doesn't. So the only thing that's moving that is a positive NFP result, so much higher than expected, which drives a massive amount of volume to continue to push this market down. And that's exactly what happened. So that is the reason why we continue to push all the way down, and you can see this is why I've left all these weekly highs and lows here. You can see very clearly that it has been tapping and retesting each one of these levels before getting to the major key level, which is 2300, and that's why I look for these main areas for confirmation and also areas of TP. So I hope that's given you guys an overview of what the reason was behind why gold moved so much, and how you would have looked at an entry based on all the different time frames, based on the dollar index moving up, based on the 10-year bond yields as well. You can see that obviously there was a massive 3% climb on that as well, which then now correlates to the dollar index as well itself. And then looking at the actual market structure all the way from 6 months to a month, all the way down to the half an hour time frame, you should be able to begin to understand why the moves were forming the way that they were. As we now, you can see there's a couple of trend lines I forgot to mention as well, as we broke above on the Thursday to reach that Asia high and the 50% fib level before now dropping to take out the liquidity from all these levels and breaking below 2300. So if you guys are looking at it from a weekly perspective, I would think that over this coming week and over the next few weeks, we may now begin to continue pushing down, or we may have a small pullback before we have a continuation to the downside, because we still have to break this low from a few weeks ago. So that once this low gets broken, we may have a small retest before we start to fill in this imbalance gap and then reach this area over here, which is going to be the next sort of key level. And as I mentioned, it'll be about 2150-ish range, which you guys can be looking at as a long-term point of TP if you're going to hold trades that long. Of course, it depends on your strategy, it depends on your plan and how you are going to look at the charts, but that's the sort of strategy that I would be looking at long term. That's my breakdown. I hope you guys found that informative. If you have any questions, leave them in the comments. I will go through them and answer them for you. But there's a lot of information here to look at. There's a lot of information when you look at the charts. It's always how can you read it based on the knowledge that you have, and of course understanding the markets around you, understanding the finance world around you, for you to put all that information together and then bring it into this space where you can trade effectively, manage your risk, and of course making profit is the byproduct of all of that hard work. So hope you guys enjoyed it. If you like this video, give it a thumbs up, subscribe to the channel, and I will see you guys in the next video. Take care.